Hello students, this is Sharat Kumar here, Economics faculty from Shakthi International School. I hope you all doing great. Today we are going to discuss about another method of measuring a national income. So that is income method. In the previous video we have discussed about value added method. So today we are going to talk about income method. So let's start. Okay, fine. I hope that you could able to see the shared material on the screen. Okay, so this is income method. This is the second method of measuring national income. Let me give you a brief idea what is this income method. Then let's talk about some of the components, what and all will come under this income method. And at last, we will discuss about the steps to be followed to measure national income by using this income method. Fine. Okay, then let's start. See, as I told you that there are three different phases in an economy. Okay, production phase, income phase, and expenditure phase. So now we are doing income method by adding those components which we get at income phase. Okay, so as you all know that the factors of production being served to the firms, so by the households. So while they are serving these factors of productions, so obviously they will get something as return. Okay, those return we call it as factor income. Okay, these factor incomes being received by the households. When you are summing up all those income called wages, profit, interest, and payment. Okay, when you add all together, okay, so by that time we are going to get an aggregate. We call it as a national income. Okay, so once again I'm repeating you, when you add all the incomes, okay, all the incomes of the households, what they have been gained by serving the factors of production, okay, by adding all together we obtain national income. Okay, could see over here they have given the definition, so which is matching to our discussion. Okay, let's go for the some of the components what we need to add on, okay, while measuring the national income. So let's see the very first one, that is compensation of employees, COE. Compensation of employees, in layman language we call it as salary, wages. Okay, so when someone gets this compensation of employees, okay, when he is serving his labor, okay, his employer is going to pay this compensation of employees to his employee, the amount paid to an employee by an employer. Okay, so the COE, an employee can get it in direct manner, indirect manner. Okay, everything will come under the category of compensation of employees. So let's see some of the sub elements which and all come under the COE. The very first one is wages and salaries in cash. The most of the COE will be paid in the mode of cash, like salaries, bonus, dearness allowances, commissions. Even there are different varieties of mode of payments which employer will give it to an employee. These are the few, so which happens in cash. Okay, and we have another something called wages and salaries in kind. See here what happens, these are the non-monetary benefits. The employer never going to give a cash in this particular element. So they are going to give non-monetary benefits like giving rent-free home, free car, free medical arrangements, and education facilities to an employee's family. Okay, if they are providing any such kind of benefits, so which could be treated as wages and salaries in kind. Yes, this also a part of COE. And one more thing we have to understand, that when any such kind of facilities being arranged by an employer, which is very which is very necessary for the working purpose, for to do a job in a specific firm, okay, that cannot be considered as a wages and salaries in kind. Let me give you an example. If employer is providing an uniform, okay, if employer is providing a meal, okay, at afternoon when they are in the working premises, so this and all cannot be considered as a wages and salaries in kind, because these are the facilities which are needed in the working atmosphere. Okay, so that will be treated as an intermediate consumption. Okay, that cannot be considered as a part of wages and salaries in kind. Okay, and the next element is employer's contribution to social security scheme. We call it as triple S, social security schemes. So there are you could notice that there are something called gratuity fund, pension, provident fund, labor welfare fund. These are the some of the social security schemes where employer needs to contribute to an employee's account. Okay, this also be treated as a part of COE, employers contribution social security scheme. And one more note over here, if any such kind of schemes being offered by a third party, for example, an insurance company, cannot be treated as a part of COE. When an employee is contributing to any social security schemes, that cannot be treated as part of COE. Here we are only going to consider employer's contribution. Fine. Okay. The next one, we have the second component in the income method. We have done with COE. Next one is rent and royalty. Fine. So rent and royalty. So rent is nothing but it is a kind of income received by the owner of the land and building. Okay, when they are giving the service, okay, of land, so by the time they are going to receive rent as an income. Okay, so here we are going to consider an actual rent as well as imputed rent. Imputed rent nothing but the rent of self-occupied property by the landlord. Actual rent nothing but giving the land for a rent to the firm. Okay, so both imputed as well as actual rent, both will be taken into consideration while we are measuring the rent. Okay, we have something called royalty. Rent and royalty will come under the same umbrella. Here royalty is nothing but it is a kind of income received when you're leasing out, okay, any rights of subsoil assets. Like you're allowing your land for mining or extracting some resources or using land for some other purposes. Okay, by the time the income you are receiving from that could be treated as a royalty. Royalty and rent could be considered as one and the same. And we have another component called interest. So interest is a kind of income received when you're lending funds to the production unit. See, try to understand production unit. Only that income could be considered as a part of national income when you're lending some fund to the production unit. Okay, that can be treated as part of national income. And which cannot be treated as part of national income. What kind of interest? Yes, you could see some list of items they given here. So when interest paid by the government on public debt, interest paid by consumers as such interest is on loan taken for consumption purpose. Kindly make a note, consumption purpose. That means if either government or a common man, if they are borrowing something, when they are paying any interest for that borrowing, okay, that cannot be considered as a part of national income. The reason is that here we are assuming that whatever they borrow, they are borrowing it for consumption purpose, not for productive activity. And we have another point, that is interest paid by one firm to another firm. You see that? So when one firm is paying an interest to another firm, that also we never consider. Why? Because here we are assuming that that will be already considered in the profit. So if you take once again, it will create the problem of double counting. So that is the reason interest paid by one firm to another firm will not be taken into consideration. Okay, we have a fourth component, that is profit. Okay, you know this profit is a kind of reward to an entrepreneur. Okay, when he's contributing all his ideas to produce goods and services, so for that idea, he will get some reward. That reward will be treated as profit. Okay, so profit is a reward received by an entrepreneur. Okay, so while you are deriving a profit, what and all you need to add back to get the profit of an entrepreneur? You have to add corporate tax to get profit volume. Okay, corporate tax will be also considered as profit tax and business tax. This tax is collected by the government. Then dividend. Dividend is nothing but a portion of profit, okay, which is being declared to the investors. They also call this as a distributed profit. When you add all the dividend, you can derive the volume of profit. Then retained earning. Retained earning nothing but it is a portion of profit where firms are going to retain with themselves for future purpose or for future investments. We also call this retained earnings as undistributed profit. Okay, so this undistributed profit also we need to add on. So to get profit, we have to add corporate tax, dividend, and retained earnings. Okay, fine. We have another component here. We call that as operating surplus. You could see that operating surplus. If you want to derive this operating surplus, you have to add income from property and income from entrepreneurship. So what could be income from property? Rent, royalty, and interest. When you add rent and royalty, interest of household, we get income from property. When you add the profit of an entrepreneur, we get income from entrepreneurship. So when you add both together, we get the value of operating surplus. Okay, operating surplus is equal to rent, royalty, interest, and profit. So we have the last item in an income method which we need to add, that is mixed income. Okay, so the name itself is suggesting you that so this is an income mix of all the factor incomes, because this is an income generated by own account workers, or we call it as unincorporated entrepreneurs, okay, or enterprises. So for example, retail traders, small shopkeepers. So when someone is running a business in his own residence, by using his own labor, by using his own investment, everything by his own. Okay, by the time it is quite difficult to differentiate or segregate the factor incomes. So what we are going to do, we are considering his income, which is a combination of all, as a mixed income. Yes, of course, we are going to add this mixed income while measuring the national income in an income method. Okay, they given an example like income from a doctor running in a clinic at his residence. So his income will be considered as a mixed income. Okay, fine. You could see that we came to steps to be taken in income method. Okay, so in income method, we have to add all the components what we have discussed before. So rent and royalty, interest, profit, mixed income. Okay, this is a step number one. You have to add all these components and even compensation of employees. Okay, you have to add all this. Once you add all this, you won't get national income. You get the very first aggregate, that is domestic income, NDPFC. Okay, NDPFC is the very first aggregate. You get it in income method. Okay, so to that NDPFC, when you add NFIA, net factor income from abroad, finally we could able to see a national income. Okay, kindly bear it in mind. This stage, in very first stage, we have to add all the components. Then we get NDPFC. To that NDPFC, we have to add NFIA. Final outcome will be national income, that is NNPFC. I hope this was useful to you. Okay, in coming video, we will try to solve a numerical by using this income method. Okay, so let me see you in the next video. Thank you.